Lisa Eyer, and it's my great privilege today to have the opportunity to introduce you to two CFOs with tremendous company stories that they're going to share with us today. But first, a little bit about me. I joined Consero in August of last year, so relatively new to the business, but coming from a fintech payments background, transforming businesses and operational teams across 20 plus years, and excelling and empowering client success teams across those years. So with that, I want to do some quick introductions. So Ellen, Purdy, I'm going to hand it over to you. And after Ellen, John Araki will introduce himself.
All right. Hello, everybody. I'm Ellen Purdy. I'm the CFO of Synacor. Synacor is a software company. It's backed by Centerlane Partners, a private equity firm. And just to give you a sense of what we do, we have two products. One is called Zimbra. It is an email platform that's used by governments and large companies around the world. In fact, I just looked recently, we sell in 80 different countries. So we're a global company that way. And our other product is called Cloud ID. And what Cloud ID is, it's a customer identification and access management software tool, CIAM. And it's used mainly for media and video streaming companies. And to give you an example, the type of customers we have, HBO, Peacock, SiriusXM, NFL Network, that's the type of customers that use our software product to help their customers, help them identify customers and give them access to their video products. So that's what we do as a company. I started at Synacor almost exactly a year ago. It was the first week of June last year. And prior to that, I've been the CFO of 6 other venture capital or private equity backed companies, almost all in the technology space. I'm in the Philadelphia area. Our company is headquartered in Buffalo, New York, but we're global and we're entirely remote. We have employees in about 14 different countries. And a key thing to know about Synacor is up until 2 years ago, it was a public company until a private equity firm bought out all the shares and took it private. So I'll tell you a little bit more of that part of the story and how we work with Consero, I think when we get to that.
Thanks, Ellen. John?
Hi, everyone. My name is John Araki. I'm the CFO of Recovery One. Recovery One is a venture-backed digital health company. Our sole focus is to improve the quality and lower the cost of recovery from musculoskeletal injuries. So think major joints of the body, soft tissue injuries, knees, hips, that sort of thing. We do that through a combination of a technology platform in conjunction with clinical services given through our network of PTs and health coaches. And our clients are essentially people who bear the financial risk of paying for the recovery of these things. So think self-insured employers, health insurance companies, that sort of thing. My background, I came to this role from maybe a little bit, not so much of a traditional finance role. I have been in finance my whole career, but most of the time spent in structured finance and corporate finance, strategic corporate finance. So I'm not a CPA. We can talk about how that jives well with Consero. But I'm probably more of a strategic CFO. I've been with the company about 4 years. Joined when we were very nascent, and have grown in the time I've been here. So happy to share our story and help our friends at Consero.
Thanks so much, John. So before we get started, I wanted to share a little bit about who Consero is for those of you that are new in the audience today that may not know. So Consero was founded in 2006, and we are headquartered out of Austin, Texas. We have about 1,500 employees worldwide, and we do embrace that remote workplace as well. We have over 300 clients, and about 80% of those are backed by private equity or venture capital backed companies. We specialize in finance as a service, a relatively newer term, but it's an alternative to building an in-house finance and accounting team. So what we're bringing to the table really is finance transformation, helping all of our clients with ongoing finance and accounting services, not only in their day-to-day, but also including additional services up to fractional CFO services, valuation of companies, and making sure that we're preparing our businesses that do business with us to be ready for audit, due diligence, bank covenant reporting, and other value-added services that they need to run their business in a cost-effective manner. So with that, Ellen, I'm going to start with you. So you mentioned you are a 7-time PE-backed CFO, and your story about how you began with Synacor is such a unique one. Would you mind sharing with the audience today the state of the finance function for your business and a little bit more about your story?
Yeah, sure, Lisa. As I mentioned before, Synacor had been a public company until 2 years ago, almost exactly 2 years ago, when Centerlane Partners, a private equity fund, bought out the shares and took it private. And at the time, we had a third product line, and very quickly we decided to sell off that third product line. So, and it was roughly a third of the revenue. So we went. We quickly became 2/3 of the revenue that we were as a public company. And they also brought in a new CEO. That CEO actually had experience using Consero at a prior company that he had worked for. So he knew, he had some good successes with Consero there and realized that we needed to quickly scale down and then be able to scale back up our services and transition from being all the activities that go with being a public company from an accounting and finance perspective to private equity back, which is much more nimble. Reporting it has to be quicker. Forecasting has to be done quickly and accurately and providing good visibility and transparency. And so we need to make some major changes to our accounting department. And so he made the decision to do that, to transition our, to basically downsize our internal staff, outsource it to Consero prior to me starting. So I started in June of last year. The implementation got underway, I'm going to say maybe about April or so. And so that was already underway when I came on board. And I had never worked with outsourced accounting or finance as a service before, but I thought, I know that the private equity firms, finance as a service makes sense for growing companies. It makes sense. The private equity firms are embracing it. It's something that I wanted to learn. So I came in, had a controller who was managing the implementation, very much involved in the day-to-day. And while I was getting up to speed on the rest of the company, but soon, quickly, in December, she decided to take another path and leave the company and work elsewhere. And so I had to really immerse myself and really get involved in the day-to-day operations with my Consero team. And it's gone swimmingly well, like way better than I expected. I think when I came in, having had no experience, but the team is committed, smart, dedicated, and just keeps taking on more and more work that we originally intended to keep in-house, and that I've learned and decided over time that it's best to give to Consero.
Thank you so much, Ellen. So you mentioned, staffing can be a challenge for every business. I'm sure not only in this role, but even in other roles. Can you tell us just a little bit about how does staffing loss, affect your team, and how do you overcome that? And maybe how does that engagement with Consero help you in that area?
Yeah. Well, so when we decided to go with Consero, and again, this was before I started, just shortly before I started, we had a specific plan of which of our roughly 8 internal staff were going to be let go, and we were going to keep 2 in-house, 2 plus the CFO, so 3 including me. And we had a specific plan of which function that the OTC leader, ARAP would leave at this point, financial and FP&A person would leave at a certain point, collections person would leave at a certain point, month-end close accountant would leave at a certain point. It didn't go as planned. People left earlier than expected. Those that we wanted to stay left. Those that we planned to leave or wanted to transition out, stayed. And so it never quite goes as planned. And the constant through all of this is that, Consero was continuing to pick up and learn the business and fill in the pieces, fill in the missing holes of the people that were leaving. So much so that even when the controller left, I felt I was in the position where Consero was training me a lot on how we do certain functions, the details of the order to cash. How we're using bill.com for our payables. They actually became the trainer of me during that transition of those people leaving the company. We're stable now. We've got our two, internal staff, and over time, I just keep finding more and more things that Consero can do better, more efficiently than we can do in-house.
One more question for you, Ellen. So you mentioned, right, and I think people are skeptical about outsourcing. This is your first experience, as you mentioned, with an outsourcing firm. What experience or advice would you have for anyone considering doing a similar arrangement with Consero and managing a very successful relationship?
Yeah. I think that one of the things that I found that's worked well for us and I feel really close to my team, the leaders on our team and others that support us, is to treat them like they're employees, not as a service provider. And when I first started out, it didn't feel that way to me because I had somebody between me and Consero in that controller. But once I started getting much more involved in that relationship, I just decided to lean in and say treat them like they're part of our team. And what that means is, for example, if an error were to happen, treat that error, or treat the person that committed that error the same as you would if they were on your internal team, which errors happen. And they're rare, right? But they do happen. You might miss something in a journal entry or something like that, right? For example. And like John, I'm not a controller background. I came up through FP&A. So it was important for me to treat them very much like a team, like they are my controller side of the accounting and finance function, and really embrace them as team members. That was a key for me.
Thank you so much.
Yeah.
All right, well, let's take a look at your case study slide. So as you mentioned, transitioned from a public company to a PE-backed company. So a completely different outlook on reporting and KPIs that are critical to running the business. And even though this was prior to you coming on board in Synacor, what we at least wanted to share, and I think you've reinforced through some of your talking points, is that with the in-house cost to run a finance team, Consero was able to step in, include those services in our program with you, and overall save 51% in cost savings to the business, which is fairly significant and even more important right now with the current pressures economically on companies. Anything to add to that, Ellen?
Like I said, I wasn't part of the ROI, but I saw this when I came on board, and I'd say that it's fairly accurate. At least 51%, and there's still more opportunity there because we're at the point now. It's not so much about cost savings; it's more about optimizing and getting more efficient, and always looking for ways for continuous improvement. That's the stage we're in now.
All right. Thank you, Ellen. We're excited to keep growing with you. All right, John, let's switch over to you. You came on board with Consero about 4 years ago. Can you share some of the challenges you had back then and what factors played a crucial role in your decision to use finance as a service?
Yeah, of course. I find Ellen's story very interesting just because mine is so different and completely at the opposite end of the spectrum. She went from a public company. I joined the company about 4 years ago when we had, I think, 13 employees. And the finance function was being conducted by an office manager who had probably never opened an Excel spreadsheet in her life, was doing cash-based accounting out of QuickBooks, maybe using 3 or 4 different accounts in her chart of accounts. Our month-end reporting was being done by the founder's personal accountant, who had no real corporate accounting background. And so I walked into essentially a finance function that was virtually non-existent, and had the challenge of putting together something that at least resembled a professional finance function as in a short amount of time as I possibly could. And we talked internally about building a team out, which would at least at a minimum probably include 1 additional full-time person in addition to myself, and then looked at finance as a service options, where we were introduced to Consero, and the rest is kind of history, I guess.
Thank you. So we talked a little bit about the current economic climate, and many executives have the challenge right now of tightening budgets. Can you provide some examples of how Recovery One has successfully achieved that goal of kind of doing more with less without compromising on quality?
Yeah, so I mean, one of the things that we have focused on, or at least I have focused on, I had my team focus on, is vendor management, which is never a fun thing to do, right? But we all get stuck in our ways, and we all have key vendors, such as Consero is to us, who have been doing what they do for us for a long time, and we just go with it. And so whether it's looking for alternatives that at a lower cost, or perhaps getting more value for the money that you're spending with a vendor, it's actually surprising. And we would never do this with Consero, because we love them, and they're such a key part of what we do as a business. But it's amazing how much direct cost savings we've actually been able to find just by looking at things a little differently and going, hey, can we do this a little differently, or can we find somebody else that does this a little bit differently? So that's the one thing that not just so much about cutting dollars, but rethinking relationships that you have with vendors, I think is really important.
Great. And you may have answered part of this question, but any strategies or tactics that you are putting in place to gain efficiency through the finance function?
Yeah, so that's a hard question to answer, and I'll tell you why. Because for me, Consero is equals efficiency for me. My finance team is still myself and 2 other individuals, and so everything else that Consero brings to the table, whether it's O2C, accounts payable, reporting, FP&A, all that stuff is just efficiency for me in a way that we could never replicate as a 50 some odd person company. And so it just provides a service that scales with us in such an affordable way that I couldn't imagine. And it's not just about day-to-day kind of things. In fact, one of the best things I found is the ad hoc support that we get from Consero. They're very flexible in a way that the audit, I mean, I used to spend so much time on our audits, and now it's essentially, I don't want to say hands off, but it goes so smoothly. So things like that just are invaluable, I think. And those are where I feel like you guys add the most value. I mean, anybody, well, not anybody, because I can't, but you can find people to do journal entries, right? I mean, that's not what, but it's the additional service that we get from Consero that really makes it really worth our while.
Thanks so much, John. Allison, let's take a look at John's case study. So Recovery One, as we mentioned, really was looking to offload and outsource some of those tactical tasks, professionalize that finance function, as you mentioned, and that's not that unusual. That represents quite a few of our clients who are just really looking for help and trying to get to that next level of professionalizing. And then get audit and due diligence ready, which is really a core competency for Consero. So again, looking at the in-house cost and switching over to Consero, about a 60% cost savings was projected at the point that you came in to do business with us, John. So anything else to add to your case study?
Yeah, I'll say this. I think this number is understated. Like, this was done before our implementation. And if I think about what we got after we were done with our, I can't remember how long it was, 4 to 5 week implementation project, what I ended up with was way more valuable than, or replaced by a staff accountant part-time and an F&A stack. So the cost savings, direct cost savings, yes, probably 60%. But to me, this number feels light in terms of like pure value. So I'll just add that.
Thank you so much. So I wanted to just maybe toss one more question back to both of you, and Ellen, I'll start with you. But so talk about some of the other creative ways that you think about just, maybe not just reducing cost, but controlling cost and gaining efficiency overall in the finance function. Or what recommendations might you have, again, for, our audience that might be considering whether finance as a service is for them?
Yeah, sure. I can give you a couple specific examples of gaining further efficiency. One is it's technology related. So the decision was made to continue using our expense reporting system, which is Concur, SAP's Concur, despite the fact that that Nexonia comes as part of the Consero package. And so we are going to now transition off of Concur, and there's going to be direct cost savings there. We're paying Concur to use that system, whereas Nexonia comes as part of the package with Consero. So there's, again, that's like that continuous improvement. There's still more areas that we can add value and reduce cost, improve efficiency. That's one example. Another one is Intact has a contracts module. As a software company, your contracts are your basis of your revenue, and they can be pretty complicated. And we bill to something like 900 customers. So but the initial implementation, we did not implement the contract module. We're now coming up with a project plan to do that as the next step. From an actual dollar cost savings per month, it's going to be pretty much a wash after the implementation fee. In other words, there's going to be savings of labor hours that we're paying to Consero, offset by some incremental cost of the actual software license for the contract module. So that's pretty much a wash. But what we're looking for is savings in human error, because this is now that there's going to be information passed directly from Salesforce to the order to cash and the contracts module processes within Intact, as well as our internal labor. So our sales operations team, is very much involved in the front end of providing order information to Intact, to Consero, in order to create invoices every month. So there's going to be internal labor savings because of that. It's not like we're going to eliminate a position, but certainly that frees up time for them to do more value added things. And then the third area that it's going to help us in is in KPI reporting. So right now, for doing our monthly recurring revenue or MRR forecasting, we're doing it all in Excel. We're using deferred revenue reports, which are not the perfect report to do that for. And instead, we're going to get some really nifty, slick reports out of this contract module that it's going to help us do very important reporting for a private equity-backed company, in the software space, not just for our own internal visibility for how to run the business and looking at trends and making sure we're on top of the business, but also it becomes very important when you get to due diligence. When we go, being private equity back, when we go to sell the company, we're going to have some very professional looking reports that come out of that contracts module that will help a buyer of our company understand the nature of our revenue streams and our contracts and our customers much better.
That is fantastic. John, same question.
Yeah, so it's hard for me to talk about efficiencies in the finance function when my finance team of 2 is already as skinny as it is. But I will say that the one place where I find we don't take advantage of it regularly, but that I find comfort in is that additional capacity that Consero brings for us. Is that if there is an additional report, and we've done this additional report we need, maybe if it's just a one-time deal, or if there is some additional part of our internal, I don't know, paying our contracted network of PTs, a process that where we spend hours and we can have Consero do it, just having that additional resource that I can tap into when I need it is is efficiency in and of itself. So that's what I find where we gain the most. It's just in the flexibility and the fact that I have this resource constantly that I can, that I trust and does good work, and that's the heart of it.
Thank you so much. All right, Allison, I'm going to hand it back over to you and see if we have any questions that are coming in that we should let Ellen and John take a shot at.
Yeah, thank you. So one of the questions that came in is, what role did Consero's technology play in transforming the finance function? So John, would you like to tackle this one first, and then Ellen can come in with some thoughts?
Sure. That one's easy for me because Consero's technology basically put us on the map because we didn't have any technology other than the online version of QuickBooks, which was currently being used prior to that. And the fact that we didn't have to go out and spend money and buy an expense module and a enterprise, GL, and it all came in one package, and not to mention your interactive, simple, the Consero product that sits on top of all those things was just turnkey. And it, again, like your back office staff just essentially turned us into a fully functioning finance organization overnight. And the technology piece was a big chunk of that.
Mm-hmm. Yeah, as John said, our situation is different. We were an ongoing company. We were bigger and smaller as opposed to growing. Now we're growing again, of course, but we had a full enterprise installation of NetSuite. So we were using an enterprise accounting software. We had other tools. We were using the FlowPast, for example, for month-end reporting. We were using Concur, as I mentioned before. We weren't using a payable system like Bill.com. We must have been using what was in NetSuite. But by eliminating those licenses and instead using, I guess, on a fractional basis, whatever licensing that Consero has with Intact and all those other related services, Bill.com, there were real software tool cost savings for us in switching to Consero, not just labor savings, but software cost savings. That was part of our ROI. And then, like John also mentioned, having that simple tool, which is Consero's, I would think of as like your proprietary, user interface that sits on top of Intact and Bill.com. Actually, it's integrated with that, and creates dashboards to help run the company is also a nice feature that we're benefiting from.
Great. And then another question, this one's kind of interesting. So are there any specific industry trends or emerging technologies you believe will have a big influence on the finance function in the future? Ellen, if you had some thoughts on that and wanted to start, that'd be great.
No, I think I hear a lot about AI, right? And that being applied to the accounting industry. I know that in particular, accounting firms, public accounting firms are trying to use that in their sampling techniques and, just being more efficient in how they do their work. I don't see a lot of that really happening. I think I'm more into, we're so just focused on growing the business right now. So anything I can do to be efficient so that we can reassign resources that are going to, accounting and finance or other administrative type functions, even sales operations, and reassign those to growth-oriented activities. That's what I'm really focused on. And then just in general, automation, just the more we can automate simple tasks, and therefore reduce human error and reduce time. That's a trend that's always going. And right now we're all being asked to do more with less. So, we should be doing that all the time, but even more so right now in today's economy. All tech companies are going through the same, where we're trying to do more with less. And so, again, working with Consero helps us to do that.
Great. And then John, do you have any thoughts on that question?
Yeah, the one thing I'll add is, and this is just because we've been poking around with some of these things recently, is I'm seeing some pretty interesting new tools in the FP&A space. There were a bunch of FP&A online services that kind of came on board, and they were great and they looked fantastic and produced awesome reports as long as your business worked in the way that they thought it should work. Right. And so you had to sort of find a way to fit your business into the model that they had. And I'm seeing that reversing itself a little bit. I'm seeing a lot of FP&A tools that are super flexible and work with Excel and Intact and other things that can really make the FP&A updating and reporting really much more integrated and requiring much less manual intervention. So I'm seeing a couple of things like that, which I find very interesting.
Thank you, everyone. This has been a super informative event, and I really appreciate John and Ellen for being here, and Lisa as well.